Ever wondered what happens when prices keep rising and your hard-earned cash buys less and less? That, my friends, is the sneaky power of inflation. But what if I told you there's a way to not just protect your money from this invisible thief, but also potentially grow it? Buckle up, because we're diving deep into the world of long-term inflation hedges in investing. The invisible enemy, inflation. Imagine saving up for a dream bike, only to find out that its price is doubled by the time you got enough money. That's inflation at work. Over time, it erodes the value of your money. But here's the good news: investing offers weapons to combat this. The power of gold. Gold isn't just for pirates and treasure chests, it's a classic inflation hedge. When paper money feels the heat, gold often shines. And the easiest way to get a slice of this shimmering pie? ETFs like Spider's Gold Trust, GLD. It tracks the price of gold and is a favorite among many investors. Real assets, real protection. Land, buildings, and natural resources often stand tall against inflation. Consider the iShares Global Infrastructure ETF, IGF, which invests in companies from energy to airports. As prices rise, the value of these real assets often climbs too. Treasury inflation protected securities, or TIPS. Sounds fancy, right? TIPS are like government bonds with a twist. Their value rises with inflation, so your investment doesn't get left behind. The iShares TIPS Bond ETF, TIP, gives you easy access to this unique asset. Diverse baskets of commodities. Commodities, like oil and grains, can act as cushions against inflation. The Invesco DB Commodity Index Tracking Fund, DBC, lets you invest in a mix of commodities, spreading out the risk and seeking potential rewards. Alright, intrepid investors, let's keep the momentum going. Inflation might be a silent wealth drainer, but with the right tools in your investment toolkit, you can be more than ready to face it head on. Real estate, more than just bricks and mortar. Owning property has long been a favorite method to hedge against inflation. But if buying a building or land isn't on your to-do list, consider real estate investment trusts, or REITs. With ETFs like Vanguard Real Estate ETF, VNQ, you're investing in a collection of properties, so as rents rise with inflation, so could your potential returns. Equities and stocks, a double-edged sword. Here's an interesting fact. Stocks can both hurt and benefit from inflation. In the short term, rising costs can squeeze company profits, but over the long haul, companies often adjust by raising their prices. Want broad exposure? Spider's S&P 500 ETF Trust, SPY, mirrors the performance of the S&P 500's top U.S. companies, giving you a piece of the entire market's action. International exposure. Spread your wings. Sometimes looking beyond your shores can offer protection. Different countries have different inflation rates, and by investing globally, you can balance out the risks. iShares MSCI All Country World ex-US ETF, ACWX, is a great pick, offering a mix of stocks from around the world minus the US. The power of dividends. Companies that regularly increase their dividends can be another shield against inflation. These firms, often stable and mature, can generate consistent income. The ProShares S&P 500 Dividend Aristocrats ETF, NOBL, focuses on companies from the S&P 500 that have boosted dividends for at least 25 consecutive years. Woo! That's a whirlwind tour of tools you can consider to armor your investments against inflation. But remember, every investment comes with its risks. The magic lies in understanding, researching, and making informed decisions. And if this deep dive got your investors' heart racing, don't forget to like this video and subscribe to Wythdrawl Investing Insights for more insider tips and strategies. Alright, savvy investors, as we further unravel the tactics to safeguard your wealth from inflation's sneaky grasp, let's not forget, the world of investing is vast, dynamic, and always evolving. So let's uncover some more strategies to keep your financial boat smooth sailing, even in inflation's choppy waters. Exploring more. Sector-specific plays. Certain sectors can be particularly resilient during inflationary periods. For instance, the energy sector often sees prices rise when inflation hits. An ETF like Energy Select Spider Fund XLE gives you broad exposure to major U.S. energy companies, from oil giants to renewable energy pioneers. Emerging markets, potential growth meets inflation hedge. Emerging markets can be growth engines, and they also provide some level of protection against inflation. As developed economies grapple with rising prices, emerging markets can offer better returns. Consider the iShares MSCI Emerging Markets ETF, EEM, which lets you tap into the potential of countries on the rise. Cash is not always king. A quick note on cash. While it's tempting to hold on to cash during uncertain times, remember, inflation erodes its purchasing power. It's essential to ensure a portion of your portfolio is working harder than inflation, even if it means taking on some risk. The world of investing, with its myriad of tools and strategies, offers more than just a chance for growth. It's a realm where knowledge, research, and timing come together to forge success. Inflation might be an age-old challenge, but with the right strategies, you can face it head-on. If today's journey illuminated new paths for you, make sure to hit that like button. As we journey to the final stretch of our exploration into the universe of inflation-proofing investing, let's shine a spotlight on a few more ideas. In the intricate dance of numbers and trends, it's always about staying one step ahead. Alternative assets. Think outside the box. Beyond the traditional realm of stocks and bonds, alternative assets can offer unique opportunities. Consider commodities or even collectibles. The SPDR SPDR S&P Metals and Mining ETF XME can give you exposure to industries like steel, precious metals, and coal, sectors that have historically moved with inflationary trends. Understanding real rates of return. Here's a pro tip. Always factor in inflation when considering investment returns. The 10% return sounds great, but if inflation's 4%, your real rate of return after inflation is only 6%. Always keep an eye on this adjusted figure to truly gauge your investment's performance. Staying informed, the ultimate weapon. The landscape of investing is ever evolving. New trends emerge, old ones fade, but one thing remains constant: the power of information. Subscribing to financial news, joining forums, and always continuing your financial education can be your best defense against inflation and other market challenges. And there we have it, folks, an odyssey through the world of investing in the face of inflation. A key takeaway? While inflation might be as old as money itself, armed with the right tools, strategies, and knowledge, you can chart a course that not only protects your wealth but also helps it flourish. If this deep dive into the financial seas opened up new horizons for you, please do hit that like button. For more such financial expeditions, don't forget to subscribe to Wythdrawl Investing Insights. Together, let's decode the mysteries of the investment world one insight at a time. Remember to consult a financial advisor before making investment decisions, and past performance is not indicative of future results.